Let's get into the stock of the day. It is IDP Education. Its ticker code IEL, offers student placements in Australia, New Zealand, UK and North America. Now, shares have soared this morning as an independent review of the UK's graduate route recommended the status quo of the program, which allows international students to stay in the UK for 2 years after graduation. However, IDP also suffered a setback domestically when, the Australian government has set limits, put a cap on enrolment of international students for each university, with that extending uncertainty and adding further downward pressure on potentially its FY24 and 25 earnings forecast. And in fact, the government's tying future enrolment growth to the provision of student accommodation. So brokers seeing restrictive international student policies as a continued risk for the company, and therefore seeing downside risk to consensus estimates. All right, so Andrew, what are your thoughts then, particularly given the latest move in regards to cap on student numbers?
Oh, it's not helpful from an Australian point of view, but it's not just an Australian business, it's a global business. And as you pointed out, there's the UK part, there's the Canadian part, but obviously the Canadian part's had issues relating to those tensions with India as well. It's interesting to see that the share price popped, close to 10% despite sort of the Australian headwinds as such. And I looked back at when we've spoken about this previously, IDL, and in particular the PE. So last time we spoke about this, the PE was trading at 38 times earnings. We're now back at 26 times earnings. Now, again, that's still elevated, remembering the market trades at around 18, 19 times, but it really has pulled back. And we're looking at forecast earnings per share growth of around 10% per annum. So, to me, from a technical point of view, it's looking interesting. Probably the only thing that sort of concerns me, though, Andrew, and again, sort of more market function rather than company function, is that short interest, the number of people that are betting that the share price is going to fall, so they're borrowing shares in anticipation of that. And you've basically got, around, looking at it, I haven't got an exact number, but it looks as though it's at least a 4 or 5 year high. So that certainly isn't helpful. That's the market really saying they think that the share price could come off a little bit further. It's got a strong return on equity. It's got a great margin. But again, it's like a lot of these businesses where it's one stroke of the minister's pen, as we saw with the Australian component last night, fundamentally changes the business. So maybe as a sort of a technical buy, it might be sort of bouncing. It's sort of trading $6 below consensus, but I am concerned around that short interest in it. So I would struggle to have it as sort of a portfolio hold, but maybe as a short-term momentum play.
So, if you do hold it, then what? You hold, yeah, but unenthusiastically, clearly. Henry.
It was weird actually. I was looking at this one yesterday as a buy. Everyone has been so down on it, and a fund manager was quite positive on it. And I was reading the piece and the reasons why. As it's turned out, obviously there's some good news coming out of the UK, so we're up 8% at the moment. Andrew's right though. We have got a massive short position in this one. It's the second biggest short position after Pilbara, which is over 21%. I think about 21.7%, and this one's 16.4%, give or take. So it is a huge position, and clearly there's a lot of people out there questioning the PE, given that it's, I guess to some extent, gone ex-growth. What the market hates more than anything else is uncertainty. And at least last night, the best that you could say out of the budget was there is now some certainty about the landscape that it's playing in Australia. We've now got a little bit of certainty in the UK as well, as that independent report has come out. So there is a little bit more certainty creeping in. Every man and his dog has been downgrading this one recently. The last mob was UBS that downgraded it to $17.65, which was their price target. We're nearly there today. I have to say, it's starting to look interesting. It is so oversold. It is so unloved. And again, this is this tightrope that governments walk. We love the overseas students coming here for the income. I mean, let's face it, we have an economy that's built on tourism, mining, and education is one of our biggest exports, as it is in the UK as well. And to get people to come to your country, assimilate, learn our values, etc., work here for what limited hours they're allowed, and then to go home and spread the word. It is soft diplomacy in some respects. So it is all good. I can't help but feel this one is starting to look a little bit interesting at these levels, even after the 8% rise that we've seen today. If they slip back tomorrow because of a little bit of lacklusterness after today's bounce, I'd be probably a buyer around 16.50 for a bounce towards $20 over time. But some of the uncertainty has gone. It is oversold. It has been a dog. We could see some tax loss selling coming up in June, of course, but that may be an opportunity. 16.50, I'd be a buy. Here, I'd be a holder.
All right, okay. That is the view on IDP Education.